Hello everybody and welcome back to another video. Well, by now you're probably aware that the market is starting to look a little bit weak. And in today's video, we'll be taking a look at the markets around the US and around the world to really get an understanding whether we're about to see the bears take control once again. Has September come early? Find out more in this video. Stay tuned. All right, guys, well, here begins our market recap for the close 17th of August 2021. If you haven't already subscribed to this channel, please consider doing so. And of course, if you're a long-time viewer, smash that like button if you enjoy our content. It does help us out. Let's take a look here at the heat map. And straight away, you'll notice it was green in some areas and red in others. Of course, tech, semiconductors, Tesla, etc., even the banks, they were down. But healthcare, one of our favorite sectors in the last recent months, has continued to go from strength to strength to strength. And when we actually come and have a look at the market indices and sectors in a second, you'll see why. We've got the S&P 500 ending up down 0.71%, the Nasdaq down 0.91%, coming all the way down into Papa Powell's speech, and then of course slightly going up after that speech, after he used all of his normal wordings. Basically in the speech, all Powell said was that, the Delta variant would be a wild card for the economy, and now we look towards the Fed meeting minutes, which will be coming out on the Wednesday session this week, and that will be probably the thing that the market is trying to dissect next. We also had a massive fall off in the Russell 2000, the small cap companies, followed by a decent gain into the end of the day, negative 1.22% it ended on. Let's have a look around the sectors. So as we said before, healthcare was the big beneficiary. That's another defensive style sector. So we saw healthcare, biotech, utilities, consumer staples all doing well. Consumer discretionary continued to do poorly off the back of the core news. Of course, we had sales come out yesterday. It didn't look too good. And that's been very systematic of also that Amazon dip. If anyone's been following Amazon, it dipped after sales and hasn't quite recovered the way that most people expect it to. And I think this is something where we talked about a movement into services, and a lot of people have done their heavy purchasing of consumer goods over the last year while being locked down in the pandemic. Is it over for Amazon? Absolutely not. But it's just sometimes to be cautious in those kinds of stocks. So on the flip side, we have, of course, earnings. Earnings is the big thing here. NVIDIA will be the one to watch during the Wednesday session at the close. We also have Cisco coming through, one that tends to disappoint in earnings. Let's see if it can buck that trend. And on the next couple of days, we have quite a few companies. John Deere, something notable we talk about a lot in the channel, coming out before the open on the Friday session. If people aren't aware and they're new to the channel, just remember we do use quite a lot of what we call actionable data on this channel, along with our technical analysis levels. And one of those things is by looking at the Nasdaq over the last 20 years, we can kind of understand here some of the weaker months. So February was a weaker month this year. We also had some of the seasonals start to play out. And we know that September and August are lackluster, neutral style months. So if we have an average return of negative 1.3% during September, we should pay attention to that. And if we get the right triggering technicals, then we might know, okay, well, this is playing into the seasonal. We can have a go at this trade, or we know that that's behind us. It gives us that confidence to be and stay in positions. Let's move over to the technical analysis, and we'll start off here in the VIX, the volatility index, if anyone's not aware of it. Generally, the VIX will need to spike above a 20 to really start kind of like a bear trend, or at least some kind of correction, or as some people call it, crash, though I don't think we're going into a full-fledged crash. I think it's more of a correction between that 5 to 10% if we do fall through. And we talked about this 15.5 last week being a very good trigger level. Congratulations to anyone that's been in the VIX, the volatility index trade on the long side. They've obviously done very well. Great percentages to be had there. Looking for the 20 to break. Let's move over to the dollar index. So the dollar index is finding the big bull here. The strength is coming back in. You can see on the weekly, it's approaching that 93. It's actually hit it. We're looking for a 93.20 plus closure here. And you can see how significant this is for the dollar index. One resistance, two resistance, and then we've got this third resistance here. If we close above this, what we're really doing is we're solidifying an incredibly large long-term pattern. Look at the double bottom here on the monthly. We have the low, we have the low, we have the intervening peak, and we also even have a rejection candle. We close the monthly above here, you would have to think that risk is off and the dollar index is looking towards quite a lot of strength. Remember, double bottoms on the monthly, they're no joke. They've formed over a very long time, and this is the type of pattern that you should recognize. Even if you're a scalper, you need to know what's going on in the larger time frames, and this is a great example here of a pattern showing up. US 10 years acting a bit strange. This is the US 10-year yield. Basically, we've seen two rejections here with weakness coming into the session where the 10 years looked bad. Of course, basically showing us that inflation is not a concern. Then we've seen it turn around twice now, creating two pin bars. If you start to see follow through momentum and it gets through this 20, you know, the US 10-year could be looking at actually some strength here. So watch this chart, certainly one to check out. And remember, US 10-year going up is not necessarily the best for the short-term Nasdaq. I've talked about how I don't think inflation-based concerns smash the growth that much long-term. But if this does start to trigger again, it could mean that we have the S&P 500, the Dow, and other things going up, such as the Russell 2000. But we actually have the Nasdaq going down. So watch this chart, worthwhile checking out. We'll move over to TLT. This is the 20-year bonds. You'll notice our trend line did form the resistance here and it sold off. Very small move actually yesterday. I would have expected some bullish move here, but it did not happen. And it hasn't got through the top. Until it does that, you're not resuming an upward trend back in the 20-year bonds just at this stage. Move over to gold now. You can see the weekly and the follow through. It's right at the role reversal level. Let's go down to the 2-hour chart here and just have a look at it. Notice here all of the supports and the resistances. So we have resistance, resistance, support, 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 support across the board. This is what we call role reversal. It's right at that zone. For shorters in gold, you'd be looking at going down, up, down, through that 1780, and that will start to trigger in day trader shorts. That's the lightning bolt that you're looking for, guys. And for the long traders, what you're looking for now is just a break of this. So break, pull back to this level, and then continuation on. It's the key zone. We watch it. We get neutralized at these types of key zones, wait for the triggers, and then move in. Silver is very, very similar, though silver is super behind gold in the recovery. Not sure to why this exactly is. Haven't really looked into it too much. But from a technical level, if silver does play the game and move up, about 2450, 2460 should be where it finds resistance. All right, let's move over to the stock markets now, and we'll begin with Tesla. Poor Tesla. It just can't take a break, can it? There's a lot of options both ways here on Tesla. I posted it in our Discord community, the public one as well, last night. I posted all the option strikes to watch. And if you're a member of the private community, of course, you can request that using our AI robot technology at any point. But yeah, lots of calls, lots of puts. There's actually a huge amount of puts at 700 strike expiring soon. So that will be interesting to see how Tesla moves around those. And we've got here the previous kind of resistance becoming support. It was down heavily during the day. Very, very, very big, down to 650. And then it recovered back to the 665, which is an important recovery because this is the 200 daily. You'll notice here, bullish, gapped underneath, ended bullish, held. You know, this is the form of support that the Tesla needs to hold. If you're looking for day trades, I'd be looking above 675 from a technical perspective for bullish movement back into the 697. That's the kind of trigger that I think you're looking for. But yeah, not a great chart at this stage. It is down to where you expect some buyers to come in. They did, but the markets have to rally across the board, and we're taking a look at whether that's going to occur. IWM found that weakness, 10-year, of course, down. 10-year recovers, IWM recovers. It's pretty much as simple as that. Trade the IWM based on the 10-year at this stage, and we're still trapped within the broader range. We'll move over to the markets that really matter now. Let's talk about the QQQ, the Nasdaq for many. Oh, wow, it got close, guys. Look at these full-on rejections. So we're seeing this 20 moving average, the exponential here, getting put under fire every day and just hold strong. Look at this movement here. So it closes at 365, just above the 20. There's no coincidence that it does these types of things. And the reason it does these things is because it's such an important zone between the bulls and the bears. We didn't quite get underneath the 364 like we would have wanted to. If that did occur, I'd expect the markets to actually get trodden on, move down to the 358 here on the 50 exponential. But not quite yet. We didn't get the signal. At this stage, during the futures market, you can actually see that the US 100 is recovering a little bit around this zone. And yeah, use the NDX code or the QQQ code to figure out where the closures are. This is the real market trade as opposed to the fake market futures. Remember, we need to look for the real triggers when the real volume is open, not just during the 24-hour sessions that go on through the futures. This is the real market. This is what matters. So close is still above here. For bulls to get back in, you're looking for it to get above yesterday's range and then start rallying. For the bears, you're looking for it underneath the 20. We'll come back, check this out every day this week because this is getting seriously exciting in the markets if it was to go bearish. Move over to the Dow. Over here, you'll notice it just moved to the 20 moving average. Previous resistance became support. It's a nice day trade buy zone. I think the Dow was always going to be a little bit stronger off these areas. 20 moving average, we can see got bought off once. Bought twice now. Very, very strong stuff there from the Dow. Nothing really to report. If you're looking for follow through, you need that momentum to continue into the next session. Watch the small time frames. S&P 500, similar again. 20 moving average. Bam. Slams straight into it. Previous resistance, support. Good little day trade there if you're going to be buying the dip. I think these were both better trades than actually the Nasdaq from the perspective of the daily 20s. Now, if you're talking about Nasdaq and you look at the 5-minute charts yesterday and 15 minutes, you'll see some very nice trading within the ranges. There's some good trades there, guys, so maybe go check them out. But yeah, overall, excellent little area. It's buying up. We're still in an uptrend for now. We're looking for closures below these 20 moving averages for the bears to get back in control. And of course, the bulls, we need to see follow through momentum. Now let's move over to another market that's starting to struggle here, and that's the Bitcoin, Ethereum, crypto market. So they fell a little bit, and I don't think this was really to do with the market. It was more just they were due to pull back. We had that rejection candle over here, and you can see that it came under pressure the next day, rallied, came under pressure, and then closed underneath. Now I'm looking for Bitcoin, I've talked about this for quite a few days, to come and hit this 20, if not hit the 42.5 zone, which is over here. And the reason why is because after such a glorious rally like it's had, it usually goes 2 steps forward, 1 step back. Now traditionally, what I usually do with markets is I look for the distance of the leg, and then I basically take that, and that should be the next leg distance. So that would be causing about 50,000. I think because of the speed though overall, it just wasn't able to hold that. And what you'd actually also do is when you recognize this twice in a row, you'd take that as the pullback, and that should be around the average pullback. See how it kind of fits in with that zone? Generally speaking, that's the way that I start to look at markets when they're in nice bull trends. 2 steps forward, 1 step back. You know, the old analogy is the thing that you're looking for here. So Bitcoin, I'd like to see it come back to the 20, have some turnaround the smaller time frame, or even the 42.5, have some turnaround the small time frame. Never try to catch it unless you're investing and you just like that level for the long term. But yeah, this is the exact level here that I think is a very critical zone here for Bitcoin, and it's very similar to Ethereum. If we go and have a look at Ethereum, we're just about to hit that 20, and of course underneath that we've got that 28.50 zone, which would be Bitcoin hitting the other levels. Around this level, resistances should hopefully act as support, and we should see some buyers around this zone. So things to watch out for today in the trading session when we start to get into the Wednesday is going to be, of course, the FOMC meeting minutes. These will be something that's digested over time. We'll have to find out whether they've said anything that's crazy. Could it be a catalyst? Of course, anything right now could be a catalyst for the markets to drop. It's just what excuse do they want to use, and do they really want to drop it now? Do they want to drop it in September? That's the question. It's always something in plain sight that they use as an excuse, and you've noticed suddenly the rhetoric yesterday from Powell was, oh, the Delta variant. Now, we've all known about this for a while. Will it be the excuse? Who knows? Guys, in the comments section down below, what do you think will be the reason that the market drops? Let me know in the comment section down below. It could be anything. Let me know, let the community know, and we'll see whether anyone has some good ideas of what's maybe lurking in the back. Or if you think it's going up, let us know why you think it's going up. Could be just printing press. Thanks so much, guys. Remember to subscribe, hit that like button, and we'll see you live 1 hour before the US market opens.